Hi there, welcome to Kneppy Invest. There are many different types of investment vehicles on the ASX. Of course, we have individual companies or stocks. That's the main sort of category or class. We also have exchange traded funds or ETFs. They've become way more popular since I started investing well over 10 years ago. But there's something else called a REIT. And even though I have been investing for well over 10 years, I have never bought a REIT before. And I think one of the main reasons behind that is just my investing philosophy. I consider the house I live in with the mortgage, which I've now paid off, thankfully, that was my property investment. So there was no other reason, even though Australians tend to be obsessed with property, there was no other reason to put more of my money into property. I decided to diversify, decided to start buying individual companies and shares, and really disregarded the whole property section of the market. But for those investors who do want to buy more property and don't really or can't really be bothered to find an individual house or individual commercial property or something like that, because to be honest with you, when you do buy an individual bit of property, it is highly illiquid. And when you decide to buy it, you're going to be stuck with it for a while. So if you don't like that illiquidity of that individual property, maybe a REIT is for you. So I've decided to do a couple of videos on REITs, a two-part video. The first one is talking about the history of REITs and what exactly a REIT is. And in part two, I'm going to be talking about the terms you need to know when it comes to REITs, because REITs are a little bit different than individual companies. And there are some terms that you need to know for REITs that you don't need to know for in regards to individual stocks. And there's some terms for individual stocks you probably don't really have to know when it comes to REITs. So this is the plan. Today, I'm just going to cover the history and what exactly a REIT is. And then in the second video, all about those terms. So we're talking about FFO, which is funds from operation, WALE, W-A-L-E, weighted average lease expiry. You also need to know net tangible assets and also net tangible assets per unit or per share. You also have to know that individual companies have dividends, but for REITs, it's called distributions. So that's that's the plan for the next two videos. But in today's video, we're just going to discuss, well, I am going to discuss the history of REITs and what exactly defines a REIT. So what exactly is a REIT? Well, simply enough, it's a real estate investment trust. And REITs actually have been around for about 60 years. I'll talk about the history. In regards to REITs, they started in about 1960 in the United States. They were called something else in Australia. And then in Australia, they changed the name from whatever was called before to REITs in, I think it was February 2008. Now, one of the other reasons I decided to do a video on REITs is because of the size of the REIT market in Australia. It is pretty big. And we'll have a look at the top 25 REITs in Australia. Not only that, I read somewhere that Australia is the second biggest REIT market in the world after the United States, which does make sense because for some reason, Australians are just absolutely obsessed with real estate and property. A very simple definition of REIT is it is a company that owns and typically operates income-producing real estate or real estate-related assets. And that definition is very similar to those Australian property investors who are looking for that house or that unit or whatever they're looking for. And the main reason they're looking for that house or unit is twofold: to get a bit of rent or a yield, maybe that could be 3%, 4%, or whatever it is these days. And they're also hoping that that property increases in value through time. So that's a bit of a capital gain. The same thing if you invest in REITs. You're hoping for a distribution or a bit of rent coming back each and every year or 6 months or whatever the distribution is paid back to you. You're also hoping for a bit of a capital growth in the value of the property that the REIT owns. Now, the type of real estate or property, whatever you want to call it, that REITs own is wide and diverse. In fact, the second largest REIT in the world, I think it's called Tower America or something like that, owns communication towers. So you could also invest in REITs that include office buildings, shopping malls, apartments, hotels, resorts, self-storage facilities, warehouses, and mortgage and loans. And typically a REIT is not diversified, that they own real estate in all these different diverse offerings, but they're usually focused in one area. So you have retail REITs, office REITs, residential REITs, healthcare REITs, and industrial REITs. And that's just to name a few. There's all these different types of REITs out there. So have a look at that if you're interested in REITs, because potentially, if you are interested in a particular part of the real estate sector, there might be a REIT for you. Before 1960, the only sort of people who could invest in large bits of real estate infrastructure, like office buildings, say like the Empire State Building, or communication towers, were rich people, those who had a lot of money on hand, because those sort of bits of infrastructure cost a lot of money. And then the authorities wanted to change it. They wanted normal people like you and me given the chance to buy infrastructure like that. Hence came into legislation the Real Estate Investment Trust in September 1960 through the Internal Revenue Code with respect to the excise tax upon cigars, for all things. And in part two of this bit of legislation was Real Estate Investment Trust. It gave a definition of real estate investment trusts in there and a few other things as well. This came into law on September 14, 1960. And here's a little bit of a photo of Dwight Eisenhower signing the legislation into law. And the realm of the REIT has just expanded widely since 1960. So this is the timeline of REIT listings by property type over the last 60 years. So in 1960, Congress enacted the initial legislation authorizing REITs. Then in 1961, there were community shopping centers and shopping mall REITs. In 1967, railroad real estate REITs. 1970, lodging and resort REITs. In 1971, the first Australian REIT came into existence. It wasn't called REITs back then. They were called listed property trusts. And then they changed the name from that to REITs in February 2008 to become consistent with the rest of the world, because the rest of the world called them REITs back then, and they still do. And then in 1971, apartments and warehouse distribution facilities. 72, central business district office buildings, which might be one of the business or biggest type of REITs right now, particularly in Australia. Racetrack REITs in 1980, healthcare facilities and suburban office buildings in 1985, self-storage in 1986, suburban office parks in 1988, net lease properties 1990, life science buildings 1994, factory outlets, golf courses, and manufactured home communities in 1993, movie theatres and correctional facilities 1997, automobile dealerships 1998, gasoline stations or petrol stations 2001, senior housing, telecommunication towers, and timberlands in 1999, bank branches in 2003, data centres, office leases to federal government, military housing and student housing in 2004, medical offices in 2005, pipelines and single-family rental housing in 2012, farmland and casinos 2013, outdoor advertising and business storage in 2014, electric transmission lines and communications fiber in 2015, refrigerated storage in 2018, and in 2019, post offices. So as you can see, there's many different types of REITs out there, and that's probably one of the reasons REITs are becoming more and more prolific on the ASX. In fact, when you look at the market cap of all the REITs on the ASX, it is quite high. So you can't ignore REITs because they take up so much of the ASX. So why the REIT? Now, I've already talked about this, but you might think I was just making it up, or maybe you thought that was just my opinion. It is not my opinion. This is straight from the Securities and Exchange Commission. Congress established REITs in 1960 to allow individual investors to invest in large-scale income-producing real estate. REITs provide a way for individual investors to earn a share of the income produced through commercial real estate ownership without actually having to go out and buy commercial real estate, because most of the time, for most of the people, it's going to be way too expensive. Now, how does something qualify as a REIT? And I did spend a fair bit of time trying to find what is the definition of REIT in Australia. Now, I had the definitions or what defines as a REIT in the United States through the Securities and Exchange Commission. And I was looking high, far and wide for the any sort of regulation when it comes to REITs in Australia. But first, let's go to the American definition of what qualifies as a REIT. This is straight from the Securities and Exchange Commission. To qualify as a REIT, a company must have, that's very important wording, must have the bulk of its assets and income connected to real estate investment and must, again, must distribute at least 90% of its taxable income to shareholders annually in the form of dividends, or sometimes it might be described as distributions. Now, the reason I really emphasize the word must will become clear in the next two slides. So I was looking everywhere for some sort of rule or guidelines to what defines a REIT on the ASX. And then I came across this Motley Fool article, and I was really interested in the wording particularly when compared to the Securities and Exchange Commission wording, who used the word must. They didn't use that sort of wording in this particular article. It was a little bit more wishy-washy. For instance, they said will often, or they say may be, or they say typically, which gave me the idea and the thought that maybe there actually are no rules or guidelines when it comes to REITs in Australia. And that'll become clear when we look at the next slide. So often a REIT in Australia will have these sort of features. Own a property of portfolio of properties, which is obvious enough. Those properties may be geared to be between 10 and 30%. They typically have an occupancy rate of 90% or more, with tenants having an average lease of 3 to 5 years duration, and a management team is appointed to handle the day-to-day activity associated with the property portfolio. But I decided I needed to keep looking for any sort of definition when it comes to REITs in Australia. And then I found this interesting article from PricewaterhouseCoopers. It was a 150-page article, not only talking about REITs in Australia, but talking about REITs all around the world and how they are defined. So let's have a look at how what PricewaterhouseCoopers, PwC, talked about when they went to the Australian section of the REIT article. And this is what was mentioned in that PricewaterhouseCoopers article, or PwC. There are no specific REIT rules in Australia, which absolutely astounds me that there is not, according to PricewaterhouseCoopers. And I don't think they would be wrong. They should know all this sort of stuff. And this particular document was 150 pages long, talking about all the rules around the world when it comes to REITs. So there are no specific rules in Australia. They go on saying in 1998, the Managed Investment Scheme, MIS rules, were introduced into corporations law, but the MIS rules govern investment vehicles in Australia, including REITs. The rules deal with regulatory issues such as licensing and board composition for the manager, rather than specific tests that must be satisfied to qualify as a REIT. Now, this will become clear that there are no REIT rules, because there is one company, in fact, the largest company on the ASX, the largest REIT company, on the ASX, that I wouldn't necessarily define as a REIT, and that's the Goodman Group. One of the reasons I decided to do this particular video on REITs is because my next two Kneppy's analysis videos will be on the Goodman Group and Centuria Industrial REIT. Now, Centuria Industrial REIT with a ticker code CIP is definitely a REIT. You look at what they do, look at the definition of REIT, and it fits perfectly. Now, the biggest REIT on the ASX is the Goodman Group. I think it's just called Goodman Group, not the Goodman Group. Ticker GMG. They have a market cap of $37.4 billion. Now, I sort of disagree that this is a true traditional REIT, because they're a lot more than just a REIT, because they manage other people's property throughout the world, and they derive a lot of income from doing that side of the business. So that is not behaving or acting like a REIT. So if Australia had a set of rules that defined a REIT, I don't think Goodman Group would be in that group, and it wouldn't be the largest REIT on the ASX. But if we go to the second largest REIT on the ASX, that's Scentre Group, ticker SCG, not the Sydney Cricket Ground. They have a market cap of $15.5 billion, and they own Westfields, if I remember correctly. And then we have Vicinity Centres, Stockland, Dexus, GPT Group, Mirvac, Charter Hall Long Whale REIT, I'll talk about whale, what that means in my next video. And the 10th largest REIT on the ASX is National Storage. So sometimes when you do look at a REIT, you get an idea what sort of real estate they're into just by looking at the name. So it's pretty obvious the National Storage REIT is into storage. And from the 11th to 25th biggest REITs on the ASX, the majority of these have a market cap above $1 billion. In fact, the only one without a market cap above $1 billion is the 25th biggest REIT on the ASX, and that is Dexus Industria with a market cap of $961 million. So quite a few of these I've never heard of before. Region Group, Homeco Daily Needs REIT, not sure what that is. Abacus Property Group, BWP Trust, I believe that is Bunnings, I could be mistaken. Growth Point Properties Australia, Charter Hall Retail, what do they do? Retail, yeah. Centuria Industrial, it's pretty obvious they are focused in industrial. Waypoint REIT, Cromwell Property Group, Ingenia Communities Group, that might to do with lifestyle communities, those sort of things. I actually don't know. Centuria Capital Group, Arena, HMC Capital, Charter Hall, Social Infrastructure. So maybe that has to do with hospitals, that sort of thing. Again, I don't know because I haven't done any research on that particular REIT. And then, of course, at the 25th is Dexus Industrial, and more than likely, they deal with industrial property. And that's all I have for part one to this two-part series, looking at REITs, what a REIT is, the history of REITs, that sort of thing. And there are a wide range of different types of REITs on the ASX. In fact, I was looking at a REIT the other day because the share price rose 14% in one day, highly liquid, but I think the ticker code was USQ, and it has to do with student housing in the United States. This is a REIT dealing with student housing that is listed on the ASX. So I'm going to do a little bit more research on that because I think it's a fabulous idea with lots and lots of promise. So if you have any questions about REITs, if you are an expert on REITs, I'd love to hear your opinion. Why are you an expert? If you are a big investor in REITs, I'd love to hear why you love to invest in REITs as well. So leave all those comments, all those thoughts, questions in the comment section of today's video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.